Yeah, as of yesterday, there was a 93% dip in their stablecoin reserves. They were down to $41 million of USDC and USDT.
Who?
As well as they saw a mass withdrawal of Bitcoin and Ethereum. They saw a 95% withdrawal of Bitcoin and Ethereum from all of FTX. So in terms of the liquidity, they probably had maybe 12 hours left before they would have to completely stop all types of withdrawals. Also, in the United States, at least, being a brokerage system like FTX, it kind of goes under the banking rules. So, having a big background in banking, you basically have to have deposits of at least 6 to 10% in the United States. 8% is pretty much the standard for banks. So, the fact that their USDC and USDT stables were already below that figure means that they were no longer in regulatory good graces with American regulatory systems.
Hold on.
The other
So
thing,
FTX. So quickly before you continue, just I want to get this right because I'm tweeting it as well.
yeah,
FTX didn't have enough liquidity to meet U.S. banking standards.
yes, basically their stablecoin reserves were below the required liquidity that banks are required to hold in the United States.
They
And
were also over levered beyond Glass-Steagall requirements.
yes, yes. So in the United States, specifically, after the Patriot Act in 2000, I'm sorry, not necessarily the Patriot Act, after 2007, 2008, specifically, America decided that banks can no longer be as leveraged as they were. The difference here is that in Europe, they're still allowed to be 30x leveraged, which is why you're seeing a lot of issues in Europe. But in America, we decided to become more conservative with how high the leverage can be.
So
But
they
the
had
other thing,
more. They had before. I just want to get this all right
no,
because
no
it's important
worries,
for
no
me.
worries.
They were more leveraged than what the Glass-Steagall Act allows.
Post
I
Glass-Steagall.
yeah, I believe that's what Digital was saying. Yes.
What did you say,
Post
Fidgetal?
post
Sorry.
post Glass-Steagall. That's part of the wind down of the Glass-Steagall Act, which separated dollars you put in a bank and leverage that money that could be levered by financial institutions. It reduced it from about 14 to 16 to about 8 to 10. My cousin is an MD at JP Morgan, actually sells leverage analysis tools, which is one of the biggest businesses in finance. But it's what you term leverage from true leverage to other words. But yeah, 8 to 10 is U.S. Standard or legal limit. Most banks are actually about 14 to 16. FTX was far in excess of that. And then you have a liquidity incident like yesterday, and that probably was 30, 40x.
Go ahead, Cantor.
I was also going to say, in regards to the purchase of FTX by Binance, it's really a brilliant move, because CZ is not in the United States regulatory system, so in theory they can joust and FUD as much as possible without having to worry about defamation or libel or manipulating markets. So they could get FTT to go down a lot. They then could send in a letter of intent to purchase FTX on pennies on the dollar. Obviously, we don't know what that is. But the
Sorry,
other thing,
Cantor. Can I ask you a Fidgetal question if you don't mind? I'm sorry
for
to
sure.
interrupt because I'm getting messages and I'm trying to get all the facts. So note. So my CIO just messaged me. Note, join the show and send me comments. Okay. So he said the following. Note that FTX.US, so FTX US and Binance US, two separate companies, are not currently impacted by this. FTX US's withdrawals are and have been live and is fully backed one-to-one and operating normally. Does that mean that the assumption that they didn't have enough reserves doesn't apply since FTX US does not have to is fine and is not even part of the acquisition by the looks of it? So that means the US banking standards don't apply?
That's a really good question. So basically, from what I gather, they are separate entities just because FTX is operating globally and in the US. But if it were to not be the same thing, then I guess it wouldn't necessarily matter that their reserves were below a certain liquidity standard. But the fact that their liquidity is already below what they were worried about, people over sorry, let me reword this, over withdrawing. So regardless of the banking standards, at least we know for a fact that FTX, the main entity, was worried about the amount of withdrawals being too much for them to handle. And, if they only had $41 million in USDC and USDT left, I mean, I'm sure many of us on this stage know a handful of people who could withdraw that today,
Yeah, who mentioned those numbers, guys? Who mentioned the 40 million number?
Oh, that was me.
Okay, and do you mind telling me where you got that information from?
Sure. I can actually, if you want, I can post it and then pin it up here if you want with the graphs and everything. But the numbers I got were from Crypto Quant, as well as, let me see where the other one was from.
Okay, so
Cantor, is this the PAC Shield alert from yesterday with the 40.4 million USDC being transferred from FTX?
No, this is the reserve wallet. So the information I got was from Nansen as well as Crypto Quant.
Just the $40 million liquidity. So you're saying that FTX had 40, how? So this is all on chain. This is public information. You can see in exchanges liquidity that easily.
Yes.
Kyle,
I want
that's
to go
true.
back to this hostile takeover part of it, because like Binance is literally telling everyone, like, we're liquidating FTT. We're doing this. We're done with FTX token. Like, we're done with this. And so they triggered this waterfall right after all of this FUD for the API keys. It's so bananas, man. And they've been working together for literally months, acquiring these smaller, working on these smaller projects and rescuing people. It's crazy.
I think this is well planned out from CZ. This is
Look, I'll tell you this: if it's not planned out, CZ is the hero that saved the day again. If it is planned out, CZ is the genius that just acquired his biggest competitor.
CZ said they have to do deep due diligence, so I'm right now extremely concerned because CZ might look at this and say, "I'm not touching this with a 10-foot pole." They might be in like deep shit right now, right? So who knows?
So Cantor just
for example, like FTX sends 50,000 Ethereum to Voyager, and the token sees a big pump and dump. Like, how many times when they were moving these large amounts of money to save some of these projects or save some of these exchanges or acquire them, how many times were they able to do that by using the 3 commas bots and taking that and going and manipulating the situation enough to make enough to cover when they're purchasing some of these or acquiring some of these smaller exchanges?
Alex.
What's up, man? I think I'm finally up.
Bro, what the fuck is going on, man? From CZ being funny and being, everyone's talking about it being childish, to FTX hitting back, to then the report that came out yesterday about Alameda's potential lack of liquidity and massive leverage, then massive withdrawals from FTX, and then Cantor tweeted, I just retweeted it, about having just $40 million in reserves. Correct me if I'm wrong, Cantor, to the fucking tweet while we're live in the show by CZ and by SBF, Sam Bankman-Fried, if anyone doesn't know, the founder of FTX and Alameda, about the non-binding LOI where SBF or FTX came to Binance asking for help and within hours signing a non-binding LOI for a potential acquisition, and then CZ making it clear in the tweet, as he has before. I think he did the same thing about another acquisition a few months ago, correct me if I'm wrong, guys, and then ended up not going through. I think it's FTX or somebody said the same thing. We're going to look into acquiring this company, and ended up not doing it just because it was way uglier than they expected. And obviously Kyle mentioned that this is still a concern, that the acquisition may not go through, and we may see the biggest, the second now third biggest exchange get fucked. So what's your story, man? Because I know you went deep into this in the last couple of days.
Yeah, I was up till 4:30 a.m. space yesterday, and it's funny. A lot of people were kind of dragging us for even like discussing it, but there were a few factors that to me made it clear that this was like a serious situation right away. So I think there's a couple things. So there's the narrative piece, and then there's the actual technical impact. So for those that aren't aware, I pinned a thread on the history of Binance and FTX, but Binance was actually one of the first investors in FTX back when they launched in 2019. And in 2021, they divested during a $900 million round. And as part of that, they were given a bunch of FTT, which is FTX's native token. And so from a pure technical perspective, CZ shared that they had over $550 million worth of FTT that on their balance sheet that they were going to liquidate. And so, if you look at like the market cap of FTT at the time, that represented about, 1/6 of the market cap. So, just those sales alone would be enough to impact the price of FTT. But I think the biggest thing that to me was like a sign that FTX was in trouble was when they started aggressively defending the peg of FTT to $22. And the reason for like why I found that concerning is that CoinDesk came out with an article last week with a leaked piece or a leaked document that showed Alameda Research, which is FTX's investment branch, their balance sheet. And what it showed was basically they were using billions of dollars of FTT as collateral for some of the leverage they were taking out. So what that basically meant was that if the value of FTT fell a certain amount, then they actually would not be able to meet their liabilities. And I think the last piece that really pushed us over the edge was that at a certain point it became a self-fulfilling prophecy. And this is what made, CZ's execution on it like almost like a strategic evil genius. The timing was perfect. He knows the collective mind state of everyone in this industry. He knows that people stood and watched and were too late to pull out with Celsius. They were too late to pull out with Voyager. So even if there was like a 1% chance that FTX was going insolvent, people were obviously going to do a bank run. So as a result, FTT started dropping more. FTX had to liquidate more of its assets, which you could see with Solana clearly dumping harder than other alts, which was clearly FTX dumping to try to defend it. And yeah, I think the combination of CZ's selling pressure with the narratives caused a bank run. And I think FTX was literally in danger of going insolvent, which a lot of people didn't believe. But I'm like, I guess my last point is, I don't know how anyone can have spent the past year in the crypto industry and like find this surprising. Like everything has happened in this space. We've seen time after time again, even the biggest players get over leveraged. So anyways, that's just the background context.
Yeah, but Alex, just one statement you made. Everything you made makes sense. There's two important statements you made. That was beautifully engineered by CZ. So I want to dig into this a bit more. I want to learn from this fucker. This guy is killing it if this is true, what you just said. And the second point is nobody should find this surprising. Look, I've been in crypto, maybe not as long as Kyle. I think you've been in the space for a long time as well, but I've been active in the space since 2017. So I've seen some shit. This is still surprising, bro, because I remember when the whole Celsius and all that fear, I've had the pessimistic guys in my team tell me, Mario, I'm like, guys, should we, we took out all our assets from most exchanges. And then I even took out from FTX and Coinbase and Binance. But they said to me that, Mario, you're probably safe from Binance with Binance and FTX. Even they stated this. So to have within a day, within less than 24 hours, from everything's going fine to the big guys acquiring the second biggest guy, these things in the traditional space, they take days. And even in 2008, the global financial crisis, where the worst we've all seen in our generation, even then things didn't move that fast. So I wouldn't say it's not surprising. It's always a possibility, especially with what happened over the last few months. A sense of someone being illiquid will lead to immediate fear. But you must say, bro, like this moved a lot quicker than any of us expected. Like you're saying, Alex, it didn't surprise you how fast at least this moved?
Well, I mean, I should caveat. Obviously, it's like shocking, but I guess what I was saying is I've learned that, my friend, he had a really great quote to me the other day. He was like, one of the universal truths of just business in general is that you cannot have, great returns without taking great risk. And they are very much correlated. And so to me, I guess what's not surprising to me was that FTX was taking so many risks with their balance sheet. I mean, you got to remember they were founded in 2019. And by that time, a bunch of the top exchanges were already in business. So Alameda Research was probably taking extremely aggressive bets over the course of the past 2 to 3 years. And we know this just through some of the things on chain data we've seen with sort of price manipulation they've done on tokens and, the aggressive moves they've probably made with leverage and things of that nature to basically get to the point where they are. And it's quite clear that Sam was gunning for that top spot. And people don't realize the size of Binance. To put it into perspective, Binance is the number one exchange. FTX is the number two exchange by volume right now. But Binance does 10x the volume of FTX. So Binance did about $20 billion in volume yesterday. FTX did about 2.3 billion. So, I think where I guess I say it wasn't surprising is that it was very clear that like FTX was choosing like a pretty binary path. They were either going to go and be the king, or they were going to, get taken out in the process, just because the moves they were making were so aggressive on all fronts.
So you're saying, hold on, you're saying Binance was 10 times bigger. I didn't know this was 10 times larger than FTX?
Yeah, it does 10x the trading volume. If you go on CoinMarketCap and just look at trading volume, it's like Binance #1 and then FTX #2. It's obviously probably like a little bit skewed in the last 24 hours, seeing as everything's going on with FTX. But yeah, I mean, Binance is in a league of its own. Like people lose sight of how powerful CZ is. I mean, CZ is the most rich man in crypto. It's like not even close because of his BNB holdings, and like he just has so many tools at his disposal. I mean, they'll say that BNB chain is a standalone chain, but like, let's be honest, he owns like a huge chunk of all the assets on it. It's like, imagine if you like BNB chain is the third largest blockchain in the world. Like, imagine not only do you have this huge exchange, but then you also have the third biggest layer 1, which like you own a huge chunk of. Like, it's not even like close when you compare them to FTX.
Okay, bro. Crypto Columbus, what's up, bro?
Yo, what up, Mario? Oh man, this has been an amazing 24 hours. I was in a space last night.
Man, this
Dude,
is fucking
this is
insane, man.
unbelievable.
This
Listen,
is insane.
I'm kind of bullish, man. Let me tell you, M&A of this nature does not happen in a freaking uber bear market. And I know CZ he calculated this. What's so crazy? In the last 24 hours, we have gone from the previous crypto savior to the new crypto savior. We've gone from Sam being the crypto savior and everybody saying, Sam, thank you for getting us out of the Luna crisis.
Yeah, so how I want to touch on that point right after. Sorry to introduce.
Yeah, no
I'll
problem.
let you keep going, Columbus. But yeah, no, I'll let you continue, bro. But right after, Cantor still there sick. Cantor, Alex, Fidgetal, Kyle, whoever would like to comment on what happened with FTX and Luna, and how much of an impact did that have on where we are today? Because I haven't gone deep into that deal and what that acquisition meant. I kind of was out of the loop. So I'll let you finish, Columbus, and then we'll dig into that.
Cool. So fascinating. And CZ was never going to allow FTX to fail. He couldn't do it perceptionally, and he couldn't do it to the market. He couldn't create he just faked it. It was a fake out. This is what happened. Was it Kathleen, or who was the woman from FTX that tweeted, "Hey, we'll take the FTT for $22." She should have never said that. She let CZ know the price point by which they could essentially, deal with. And he said, like, I'm gonna make the shorts come out, and I'm gonna get this thing at a cheaper price. So that's what I'm gonna do, and that's what he did. They created a calculated response by CZ. CZ knew there was blood in the water way before, because Sam created this problem. He went on a buying spree. He spent so much money accumulating, and Binance saw that as a threat. Remember, Binance wants to monopolize this entire space. Let's not get it twisted. And they already are. Now they certainly are. They were very, very not happy with the Coinbase, stock exchange kind of launch. Binance has this, political reputation. We're not going to get into it, but, this whole perception, Binance is a Chinese company in the United States, is this whole thing with regulation and, TikTok.
Binance, I would say Binance is a Dubai based, and before Dubai was in, I think, Cyprus or something. So I would say it's a Chinese company.
Technically, 100%. Technically registered not in China, nothing related on paper to China. However, just because CZ is running it, there's going to be this perception just because of, his origin. Unfortunately, that's the political system, the dynamic that we're dealing with, right? Everybody's worried about, that sort of thing. I'm not saying it's accurate, but it's the perception there. So when he did this, I had a feeling he was going to say, all right, let's get to the bargaining table, and I will become the new Sam Bankman-Fried. I will do what you did previously, and I will make this problem go away. And he did it quickly. I didn't anticipate it and see it. But when I saw that he publicly stated that he would dump all the shares. First of all, from a regulatory standpoint, let me tell you, if this was like Wall Street, so many SEC violations, I can't even imagine how much.
So, Fidget, we got one or two lawyers. Fidget, would you agree with that statement? It's an important statement. Like, are you allowed to pull off such statements publicly?
It's you're getting into Elon territory.
Yeah, exactly.
It depends. I would argue to say that because the end result is an acquisition that does wash away anything that could be misperception or harm. Is it market manipulation? It's one of millions. So I wouldn't say that it stands out. It's just the biggest kind, right? So would it get scrutiny? Yes.
Well, it's also not a security, right? Like that's part of what makes so much of like crypto viable at this point. It's like FTT is not like legally deemed a security at this point. So I guess like technically speaking, like securities law wouldn't apply with the statements.
And I think also that Elon has been able to get away with tweeting stuff and not getting a little slap on the wrist and not really getting in trouble. He's taking a page out of his book and using Twitter to basically move markets. So that's
careful.
really
You're gonna get banned. You're gonna get us all banned. Elon, if you're listening, we're just kidding.
By the way, I will throw out, Mario, just something that has gone dramatically under the radar, and just so it doesn't get thrown away. It might not be perfect for this conversation, but check out the library case that just got decided on a summary judgment basis with the SEC yesterday.
What's it called?
Important stuff. The library case, LBRY. It's the first case where they're not throwing out a securities issue from a project that didn't do an ICO.
So hold on, that's the first. Can you state it again? What did you just say? That's the first ICO that they did not deem a security? Is that what you said?
The opposite. It was a project that didn't do an ICO in the 2016-2017 and tried to base their fact that they shouldn't be a security because they didn't do an ICO, and the courts rejected that argument.
And they hold on. They sold the token privately, you mean, and they didn't do a public offering?
Correct.
And they were still considered a security?
They're still no. The decision hasn't been made, but the courts very clearly said that just because you didn't do an ICO does not mean you're immune from securities analysis, Howey test analysis.
What are the other parameters that they're using then to test if it's not ICO based?
Well, that's what's going to unfold. My guess is it's the one of the biggest things that's going to come out, which is just because you don't do an ICO, but your tokens end up on public exchanges, right? This is going to go into IDOs, IEOs, STOs, everywhere where we thought we were trading.
Yeah. Fuck, man. Why make my day worse? All right, so I think this is a point worth discussing though, and later on, let me write a note. Fidgetal doom and gloom. All right, guys. So just go back to the FTX situation. So Kyle, you're gonna like this question because we're invested. I see Cantor and Solana, Chris, sub Chris. We're invested in a whole bunch of projects that were invested by FTX. Just to say, guys, I was just telling my team a year ago we were either investing in projects because they were backed by Alameda and 3 Arrows Capital, or we would, we were friends with both. So we would reach out to those projects to invest. Faith, Kyle, we both invested in Faith, which are doing well. Faith, they almost got investment from 3 Arrows Capital and from Alameda, thanks to us. And it was too short notice and they didn't invest. So we dodged the bullet there. And the reason, just for anyone listening, the reason we dodged the bullet is if Alameda, if the liquidity issue continues and they get a margin call, they may need to liquidate their holdings, and that's happened with 3 Arrows Capital, which means that any project they invested in, they will need to dump the tokens, even though prices are already suppressed. And generally, they wouldn't dump them because they have no choice. So it's not a good thing.
I'd suggest holding horses on what this means before the structure is released, right? It could be simply an acquisition that leaves everything status quo, right? Because of the brand that FTX is. So everything is just speculation until how the acquisition or the merger occurred.
True. But I'm not referring to Alameda though, guys. Just remember, I'm referring to Alameda, not FTX. The acquisition has technically nothing to do with Alameda, and I'm talking about Alameda's because. Correct me if I'm wrong, guys. And before we go to Chris and Cantor, correct me if I'm wrong, but this announcement doesn't directly impact Alameda, indirectly impacts Alameda because Alameda is sitting on a whole bunch of FTT tokens, which it uses as collateral for their loans. So technically that this acquisition will help, however they structure it, if it does go through, will help Alameda, assuming the FTT token will continue existing, and likely it will. So for me, I'm just worried on what will happen with Alameda because that was the main concern. Before the show, FTX wasn't even on my radar as a point of concern. It was purely Alameda, and I was asking my CIO, who's in the audience listening and writing me notes. I was asking him, like, hey man, like if Alameda faces liquidity issues, could SBF or FTX support it? And his answer was they likely don't have the liquidity to support it, considering how much leverage Alameda is taking.
Yeah, they don't.
So,
I'm looking at their, I think this was November 2nd. It's their research holdings, and it looks like they held 5.82 worth of FTT token and 3.66 billion of unlocked FTT, 2.16 billion of FTT collateral, and then 292 million of locked FTT.
yeah, and the question is how much leverage did they take on that collateral?
8 billion liabilities.
Jesus fucking Christ. So Cantor, Chris, go ahead, guys. In the meantime, Romy, if you can reach out to the guys at Alameda. I know FTX said they don't want to talk publicly. So we asked FTX to come on the show, by the way, guys, say we cannot comment publicly. Obviously, now we know why. But now that this announcement's been made, Romy, maybe it's worth asking the guys again if they want to come on the show and set things straight. But yeah, Chris, I'll let you go, and then I'll give the mic to Cantor.
I would say ask yourselves how much Bitcoin Alameda has before you worry about how much FTT token they have. Because yes, it sounds like a lot. And even being leveraged $8 billion on it sounds like a lot. Yet they can force $20 billion in volume in the BTC market, like just happened in the last 24 hours. Like, if people don't think that Alameda Research didn't make a fuck ton of money off this news, just like CZ did, and if you look at the price action in the candle last night when we were even talking about this, the volume was so low. Like, it's clearly a bear trap. CoinDesk incited this. You've got retail reaction to, $500 million or 500 million FTT tokens. There is not enough liquidity in the market to sell that. Like, sure, he could go dump it to zero, but then he loses a lot of money and he still owns a business. So most of these are backdoor deals, OTC trades, and the market stuff that people are reacting to, well, that's just retail investors basically getting caught up in a bad situation. Now, the reason I raised my hand is because I want to know what the over-under is that Sam Bankman-Fried buys Binance.us. Because, here's the real problem. CZ can never get BNB into the hands of U.S. citizens in an easy way. It's very difficult. You're never going to just have Coinbase selling you BNB, right? Like they do ETH and Solana and shit like that. So the adoption concept's very tough for them. But they've got a huge control over the majority of the world. And a lot of their volume is based on their leverage, right? And a lot of market makers use Binance and, I hate to say this to you guys, Bitfinex as a very good way to hedge against market direction and very good way to play against specific algorithms in this market. So at the end of the day, this is basically as good for Alameda Research as it could be, because I feel like FTX.com, the global arm of FTX, is more of a hassle for them to keep dealing with, considering they're market makers for Bitcoin. And if they're so focused on US regulation and they've donated so much to these political campaigns, et cetera, it makes sense to focus on FTX.us, and that could probably help Binance.us to some capacity. So I feel like all of us just got played like a fiddle, if I'm just being honest.
How do you? So can you explain to me more what you mean? How were we played, and what are you referring to when you say SBF? Are you saying Sam acquiring Binance US?
It's a joke. What's the over-under that happens next, right? Because Sam has all the pull here in the States, and he even bought.
I got. So how are they playing us? I don't understand. What's your narrative here?
This is just coping.
Yeah, coping. Well, what did I say last night, Alex, though? What did I say? I said, well, it's really funny that you've got Bitcoin dominance rising at support while alts are retesting lows from last week. You're basically seeing the Satoshi pairing of every altcoin get flipped into BNB, and you're seeing FTX liquidate small amounts of assets across the board to support FTT. When you look at, sorry, my dog started barking at a cat. Whenever you look at the volume of Bitcoin in that moment and you go, well, wait a minute, if the whole truck is being thrown at the market, then how come arbitrage isn't playing the Bitcoin? Like, there's so much arbitrage and so many bots in this space that arbitrage Satoshi pairings. Yet as everything's bleeding, you're not seeing any arbitrage. You're just seeing Bitcoin consolidate at support. And then what happens? You never break below 19.2. So you never make a lower low on the daily. You don't have higher volume on your breakdown candle. And this morning you get news which implied that they probably knew this was coming. I mean, at the end of the day, this was obviously the plan. How does it happen so quickly? How does it happen in 12 or 18 hours? Like, I know it's been days of bullshit, but then the entire move culminates in 12 hours overnight, which also happened to be the trading hours for the Chinese market. I don't know, man. You've got institutional money open yesterday. CME is open yesterday, but CME didn't give two shits about this fight. They didn't sell Bitcoin below 19.2. They didn't break down Ethereum. Matter of fact, Ethereum's still well above 7 million Satoshis, and Solana bounced like 15 or 20%. It was panic. CoinDesk probably did the most damage here by releasing the article.
Definitely agree with that. I think my only follow-up question, though, is do you think it's possible that like CZ hadn't even twisted the knife yet? Meaning, is there a chance that all of the dumping we'd seen of FTT was strictly off of just the fear and FUD, and then CZ just approached the FTX team and is like, hey, like, I will like actually crater this market, and like I will actually like tank your price of FTT to zero just to like wipe you off the face of the market. And at that point, it would make a lot of sense why FTX would basically, you know, give him like give themselves an out, right, and give up FTX US. Because what other reason though would, like, if FTX didn't have to do this for like financial reasons, I don't see why they would give up FTX US. Like, it's still at the end, or FTX.
Hold on. They haven't, bro. Hold on. So, give up FTX US. They haven't given up FTX US.
Sorry,
Right, they're not giving up.
FTX.com.
Correct. But that's because why would they even, like, first off, when a person is beating you in an industry, like CZ obviously has the international industry like on lock, right? The international investors. So at the end of the day, it's probably more cost efficient for Alameda and FTX to just give it up and let them have that market and just focus on the US market. I mean, a lot of people forget they acquired Ledger Live like a year or two ago, which is the only Bitcoin options trading platform that was regulated for US users. Well, that's pretty clear. They're the second largest campaign donator to Joe Biden's presidency when he got elected. So it's like, I mean, dude, it seems like he's positioning himself to kind of focus on what he can do for this country versus other countries. And when you're stretching yourself as thin as you are and you've got someone as powerful as CZ trying to take that market share from you, why not just let him have it and focus on the states? I mean, at the end of the day, that's where the money's at.
I don't like think though that's like coming from a, like, it feels like you're framing it from a point of strength where, like, I don't think it's coming from a point of strength, because if I were SBF, at least I wouldn't want to be limited to just one country, especially when there's a huge increase in competition coming in the US. I mean, you've got Fidelity, one of the largest, you know, like custodians in the entire like world, right, saying they're going to bring in commission-free crypto trading in the next few months. You've got Coinbase, which is still a very strong player in the U.S. market. I just don't think that, you know, I agree with you that it probably is in their best interest at this point to focus, but I don't think if you'd asked Sam at the like outset or a few months ago, you know, if he would have to give up the international market, I don't think he would.
My question, that's my question, and Kanto mentioned it and Fidgetal commented on it as well, is that there's more requirements for FTX US than FTX International in terms of how much reserves to have. So if liquidity is an issue, how come FTX International is getting acquired, whereas FTX.com, which is most vulnerable to being illiquid, is not part of the deal. Am I missing something?
Mario, because they
They're
don't
partnered
really
with
give a shit.
MasterCard and Visa, so they're partnered with the banking systems. I wonder if there's something in there.
Well, they also have like Paradigm and BlackRock and shit. Like here's the thing. I don't think they give a shit. Like, I don't think it's worth the hassle. And Alameda Research absolutely could pull $8 billion and settle that FTT like leverage. Absolutely. I mean, the amount of Bitcoin that those guys wash trade in a day is ridiculous. So at the end of the day, Alameda Research is a market maker for Bitcoin. That's the biggest job you can have. That's the most profitable business on the planet right now. I don't care what anyone says. People who are manipulating the price of Bitcoin and literally controlling price action, they are the most profitable people in the world right now, especially during this recession. So, like, why? Go ahead.
No, bro, I'll let you finish it off. Then we'll go to Cantor and Fidgetal. Go ahead with your final question, Chris, that you were saying.
My thought is just, why wouldn't they just focus on that? If they have this never-ending way to make money off of market, like, making, right? And why wouldn't they just use Binance as well and just get the taker fees and the maker fees? And, like, I don't know. It seems to me like Alameda's switching gears. And I think that actually FTX.com probably loses them money in some instances. So, like, let CZ have it, take advantage of the new liquidity, centralize more like liquidity to one exchange, and just continue to be a market maker and make even more money, because you don't have this thorn in your side just siphoning cash from you. I mean, at this point, I feel like FTX.com just takes money away from Alameda.